Yesterday we got some consumer sentiment data that was the worst in 12 years in terms of future expectations. Not only that, but current data, it was the fourth straight monthly decline for current data and the worst since January 2021 for consumer sentiment. This soft data weighs on the economy. It could soon transfer into hard data into the economy, into economic reports. Consumer sentiment and consumer spending accounts for about 2/3 of GDP. So if consumers are souring on the economy, this isn't great. We also had Philly Fed non-manufacturing. That index fell to its lowest levels since the pandemic. And then the Richmond Fed index numbers show declines and prices paid going up, showing a stagflationary impulse. So yesterday I made a video saying that the chances of recession are 35%. Although I still think the chances of an economic boom are higher, I might have to revisit that. I might have to increase the chances of recession slightly higher to perhaps 40-45%. I still think it's slightly less than 50%, at least as of now, but the data could change very quickly. You know, one day's sentiment, one day's view could change pretty rapidly to the next if there's new data that emerges and there's a lot of headline risk right now with the policy uncertainty with tariffs, DOGE cuts, and immigration enforcement. So they're cracking down on immigration. So that's some risk to the economy. Yes, we might bring manufacturing back here that I made in my video yesterday, my bull case, but we don't know when that'll actually materialize. They're pledges, but by the time these companies and countries actually start building the manufacturing facilities, that could take years, and those jobs might be years from now. The consumer sentiment right now isn't that great, and a lot of consumers don't necessarily want to wait years down the road for these investments to kick in. So that's some negativity in the markets right now. You know, the Atlanta Fed GDP said their last reading was a negative 1.8 prediction for Q1 GDP. If that materializes, that would be 1 quarter negative GDP. We need 2 quarters of negative GDP to be classified as a recession. So this is something to watch, obviously. Although if we do have a recession, I think it'll be on the quicker side, because the White House could easily change their narrative and be a little bit, pretty much be a little bit less strict on the tariffs, be a little bit more flexible. So that's one thing. And then even if the economy slows, the consumer sentiment data transfers to the hard data, the Federal Reserve could cut interest rates and pump more money into the economy. So I think even if we have a recession, it would be minor. And I think it would still lead to a strong economic boom that would last another 3 to 4 years or so, in my opinion. Obviously, it'll lead to a big bubble burst at the end of the decade. I think there'll be too much hype over the next few years that will lead to a pretty big recession at the end of the decade, like 2029, 2030. But until then, I'm pretty optimistic, even if we do get a growth slowdown due to this uncertainty and chaos. So that's something we have to watch. Another thing that's also a little bit negative is that the White House issued some extra chip restrictions on 50 entities tied to China with chips. And although that's good for our national security, and that's certainly the truth, it actually hurts NVIDIA and some of our chip designers because of that. And honestly, so AI and some of the chip plays might go down because of that. But honestly, China might actually innovate more with these constraints. If they don't have access to the best chips from the U.S., when there's pretty much obstacles and constraints, China has proven to innovate pretty well, at least with DeepSeek. They claim they didn't have access to a lot of NVIDIA's most advanced models. Who knows the truth? But even if they only had access to some of the most advanced chips, they didn't have many of those, and they were still able to innovate based on the older NVIDIA chips that they had. So I'm a little bit worried if you pretty much put too much export controls on the chips, those constraints might create a temporary setback for China, but that constraint might actually make them overcome obstacles. So I'm a little bit worried about that. But obviously it's good for our national security right now, at least in the short term. And then I want to talk a little bit about GameStop and Bitcoin. GameStop is pulling a MicroStrategy adding some cash on its balance, on its balance sheet and putting some of that into Bitcoin. In my opinion, although that might be a decent idea, they're copying MicroStrategy on that. I don't necessarily agree that makes GameStop a great investment. I think GameStop has a lot of nostalgia with video games and whatnot. But although its net income was good last quarter, its revenue has been declining. So this could be an effort to really rejuvenate its growth story. But if you're going to invest in Bitcoin, just buy Bitcoin directly. In my opinion, don't get into MicroStrategy. It's too leveraged. And GameStop too, it'll essentially become like a MicroStrategy. And if Bitcoin declines a lot, you could easily lose a lot of your money due to the leverage with it. So I wouldn't invest in GameStop because of this. I would just buy the underlying Bitcoin. And then I want to talk about one more thing. Tesla, after Tim Waltz's comments last week, a week and a half ago, it looks like Tesla might have hit bottom. Right now, the FBI is launching some probes into the vandalism. Elon Musk obviously had his all-hands town hall and meeting with investors and workers and telling them don't sell the stock and hold on to your stock, believing in Cathie Wood's growth story. And look, there's still a lot of reasons to be bullish about Tesla, although Elon really Elon has been neglecting Tesla recently in his efforts with Doge and the government. He needs to, put less effort, obviously, on Doge and the government and more focus back to Tesla because it created a lot of brand damage, his focus on the government. So if he focuses more on Tesla, like his all-hands town hall, his vision's very great. Look, Tesla's going to launch a new refurbished Model Y later this year, a cheaper Model 2, and Robotaxis being in Austin, I think sometime over the summer, I think in June, to be honest. And after Tim Waltz's comments, Tesla has been up 33% in the past 10 trading days. So Tim Waltz might have marked the bottom and at the peak pessimism in the Tesla stock. Saudi Arabia also is going to open Tesla stores, and Saudi Arabia has a very big market, so that's something pretty encouraging. And obviously, Tesla had weak sales in Europe for the month of February, so that's a concern. But Europe isn't really its big market; it's more China and the U.S. So, look, the refurbished Model Y, the Robotaxis, and a cheaper Model 2 coming, combined with hopefully Elon diverting more energy and resources to Tesla like he did in the recent all-hands meeting. And look, on top of that, there's also going to be, there's also growth stories, first of all, with not only full self-driving and autonomy, and pretty much they license that to other car dealers, but there's going to be robotaxis. Elon's going to, and Tesla's going to have robotaxis at the White House today, so they can really see firsthand. I'm sorry, not robotaxis, Optimus robots at the White House today, so that lawmakers could really understand the humanoid robotics play that Tesla has. And I think that'll be encouraging and be a good marketing event, obviously, for Tesla. And then, I think robotics and humanoids, as I said in my video yesterday, is a very strong component of Tesla's growth story, especially since they were going to be using them in their gigafactories later this year and perhaps do some small deliveries in 2026 next year. I think robotics is the next big play, as I said yesterday. Jensen Huang in his GTC conference last week said physical AI and robotics is also big, so they'll be working on robotics. Tesla and NVIDIA will be huge competitors in that space. They're also huge competitors in the full self-driving space. NVIDIA announced plans with GM for full self-driving, so they'll be competing in that, Tesla and NVIDIA. But I also have a few additional robotics plays that I didn't mention yesterday. We also have Serve Robotics, which does like autonomous drone delivery. There's also going to be XPeng. I'm sorry. It's a Chinese AI humanoid. It's a Chinese EV car company, but they're also working on iron humanoids. There's also Intuitive Surgical, which is robotics for healthcare and surgery. And then there's also some Symbiotic, ticker symbol SYM. They do, I think it's like logistics and warehouse robotics. And Teradyne also does industrial warehouse logistics and robotics. So those are my additional robotics plays. But yeah, I think robotics is the next big growth story in the market for this year. Let's stay tuned.